Triangle Energy is a West Australian oil producer with a $17 million market capitalisation. The majority of the valuation is based on its holdings in State Gas. Triangle currently owns around $12 million worth of gas shares. Should well production testing be successful, State Gas is aiming to produce gas in 2023, in which case the share price should rise substantially. The remaining $5 million of TEG's valuation is presumably based on their strong cash position. They recently sold $16 million worth of oil, which production was already paid for and they had in inventory. So a majority of the $16 million should be added to their balance sheet. And in the near term, TEG will be producing around 800 barrels per day, with a cost base significantly lower than the current oil price, as shown in this chart. With a significant cash position, you may be wondering why this is not being priced in. The explanation may be that this is due to TEG's net decommissioning liability of around $14 million. However, I still believe that the company is still significantly undervalued, as TEG is currently profitably producing oil and has reserves of 800,000 barrels of oil, which would have an in-the-well gross value of around 130 million Australian dollars at current oil prices. Triangle also has significant prospective resources, which Triangle could potentially drill and evaluate. So there is potential to significantly extend the production life of the Cliffhead joint venture. Another reason for the discounted valuation, as TEG will likely spend a lot of its funding on exploration. However, TEG does have a lot of exploration potential, as the L7 exploration area is very close to Lockyer Deeps, as pictured. If TEG was to make a similar discovery, the share price could certainly soar through the roof and the stock could be a 10-bagger. The prospective resource is shown in the tables below. And in regard to this report, as well as others that I've mentioned, I've pasted links in the description of this video. TEG is also considering a modular refinery, and TEG was performing a feasibility study with results expected in Q1 2022. However, I think these results have yet to be announced. Oil prices are expected to decline only gradually over the next few years, but are currently very high. Therefore, I speculate that TEG could make a short-term move to 1.8 cents, and long-term, TEG has the potential to be a 10-bagger should exploration be successful, or if State Gas is successful in transitioning to production. I have a fairly optimistic view. However, the key risks for this stock are unsuccessful exploration, a failure or delay by State Gas in development of its project, or a crash in the oil price, which I believe is quite unlikely in the short term, but towards the end of the decade may be a possibility as the world transitions towards green energy and electric vehicles.